So it is April 2024 and what's going on in the housing market. So we're going to talk a little bit about interest rates, about inventory, the weather. Kind of feel like I'm on News 12 or Ron Burgundy from Anchorman, but we're going to have some fun with it today. So we're starting to see a little bit more inventory creep in the market. The first quarter of the year, we did see, less than what was projected. I think a lot of that in our area had to do with the weather, some uncertainty in interest rates, and also we have a presidential election this year. So as April came around, warm weather kind of came in. We saw some sun finally, even though I know April showers bring May flowers. We did see some housing inventory come on the market already. So that's a good sign. We're starting to see that creep up a little bit more than what we saw in the first quarter. Right now, because the overall economy is doing stronger, the job markets are doing well, inflation is still, I think it's about 3.5 right now, where the Feds want a target of 2%. We are seeing the Feds now put out statements that they are going to hold their benchmark interest rate for at least the next few months. If I had to make a prediction, I think we're going to see maybe one rate cut this year towards the fourth quarter of the year, but I don't know if that's going to really happen depending on what goes on with the economy, and we do have the election, like I said, this year. So what has that done overall for interest rates? That has actually rose interest rates since the Feds have come out and said that, because now Wall Street and the spread between the 10-year Treasury and mortgage rates are saying, hey, it's going to be a little bit longer before the Feds actually lower the rates, which has then caused rates to go from about 6.5 to 7 on average. Where is everybody projecting these mortgage rates to go? They're all probably in the mid sixes, by the end of the year, maybe 6.25, something like that. But if I had to take that guess, I'd say 6.25 to 6.5 by the end of the year. Right now, we're hovering closer to that 7%. As you can imagine, as the rate is higher, the demand is a little bit weaker, but we still are in a supply-demand situation where there is less inventory and the demand is still strong. Rates hovering around 7% is pretty much where they've been now for a while. We've seen those dips a little below, a little bit above, but we probably average around that 7% for a while. So we are still seeing strong demand in our area. I speak to a lot of agents throughout the country, on a monthly basis, and some of them are seeing some weak points out there, with demand. But knock on wood, we are not. We're still seeing a pretty strong demand out there. Lawrence Young, the chief economist of the National Association of Realtors, recently put out, housing demand has been on a steady rise due to population and job growth. Though the actual timing of purchasing will be determined by prevailing mortgage rates and wider inventory choices. We're in Metro New York. People want to be in the area. So we are still seeing that strong demand. And yes, we will see more as interest rates drop, as inventory comes on the market. We'll see a little bit more demand and coming out of it. And, I'll tell buyers this all the time. This is a time where if it is time for you to buy, you do need to make sure that you're prepared to enter in this market with the highest and best situation. If you're a seller, do you have your other place to go to? What are we doing? What's our backup plan? Are we renting for a couple of years? You're staying with family. What is our plan just besides the transaction today? One of the things that we are seeing, which is factoring everything, we are seeing some wages climb. Now, I don't know about you. I definitely have felt inflation a lot more in 2023 than I did in 2022, as I'm sure most of you are. And we're seeing that even though, wages overall are climbing across the U.S., we are still seeing the inflation climb as well, which is kind of balancing that out, which is making some of those purchases a little bit tougher all across the board. So where do home prices go this year? I do think overall we're going to probably see in our area probably a 5% increase, on average. Homes that everybody wants, the nice size rooms, is in good shape, nice backyard, good street. Yeah, everybody wants them highest and best. You may see a 10% increase in those homes. The homes that need a ton of work, that are back in the highway, that have small rooms or stuff going on with them, you may see a little bit of price declines. You're seeing that homes, either they move quickly or they're going to sit there. And this is where, when you're putting your home on the market, it's very, very important that we do the prep work ahead of time and know where we are. Even if you're going to do nothing to the property, it's making sure that it's presented properly to the market, that we're not sitting on the market for 3 months and having to do price reduction after price reduction. So, obviously we're in housing. It's definitely still one of the best investments long-term. The projected growth, for people that own a home over the next 5 years, about $84,000, in your own personal net worth. And it's true, and that's with a slow growth compound interest in there. And I'm sure, they're saying if a home is worth $400,000 today, in about 5 years, it'd be about 483. And that's probably about right. I think we're going to see a steady increase, over time. Do we hit a little bump in the road in the economy? Maybe. The prices go down a little bit? Maybe. But I think overall it is, on the upward trajectory. And I had a conversation with one of my clients, who's actually one of the first builders I met 20 years ago. and he buys properties and rents them out. And I said to him, I said, is it worth it? All the headaches you've been through, all this stuff. He goes, Eric, he goes, it's one of the biggest parts of my personal net worth to hold these properties, and it's holding it long term. You know, on a day to day, sometimes it doesn't make sense or it's hard to see it. But when you look back at 25, 30 years, you could see how much more of an impact it's had with the ups and downs in the market. So, you know, I encourage you, let's get on a call, let's hop on a Zoom, let's go over different details that make sense, whether it's buying, selling, investing, renting, whatever the case may be. You know, we have a lot of different, you know, options out there, things to discuss. It's not a one size fits all. I do believe in making sure that we tailor everything to our clients' needs specifically, and we'll make the best thing for you. So any questions, reach out. Happy to hop on a call, DM, you know, smoke signals, whatever it takes.